Denver has been one of the hottest apartment markets in the country over the past few years, and it still is, but how long can it continue to be with apartment construction now at the highest level seen in 10 years? Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your Denver update. Let's start off with perhaps the most encouraging number coming from the Denver-Boulder metropolitan area's apartment market, 5.4% year-over-year rent growth. That ranked fourth among major markets nationally, behind only the Bay Area markets, and the only other markets to get even above 4% were Austin and Seattle. So now let's show you the trend in annual rent growth over the past few years, and you can see that while rent growth levels have eased some since hitting 6.5% last year, they haven't fallen much. By comparison, over the same stretch, the U.S. average has slid from 4.8% to just 2.6%. But how long could rent growth continue at these levels given the huge ramp up in apartment construction? At the end of Q1, there were 11,472 units underway. That represents a 4.4% expansion rate for the inventory base here. That's one of the fastest clips nationally, and it's the most construction seen in Denver since the tail end of the tech boom in 2002. And here are the 5 submarkets, the most construction as of Q1. Central Denver with 2,954 units, lots of high-end luxury product in that mix. And that is actually more development than this submarket has seen at any point going back more than 2 decades, even during the tech boom. And also lots of construction in Broomfield, Tech Center, Northeast Denver, and the South Denver Englewood submarket. So overall, as you saw, annual rent growth remains very strong in Denver, but we are seeing some effect from all this construction in some key market segments. Let's look first at annual rent change by product age, and you can see that most segments produced hikes of 6% or more in the past year. But in that segment built since 2000, which competes most directly with new supply, rents climbed only 3.9% annually. A year ago, in that same niche, rent change measured 7.1%. So clearly rent growth levels have eased as construction has picked up. And let's look at that central Denver submarket where there are nearly 3,000 units underway. Here's what's happened with the annual rent growth levels of the past few years. You can see this submarket was posting fantastic rent growth through 2011 and through the first half of 2012, got into double digits at one point, but a big slowdown since then. Rents up just 3.6% year over year as of Q1 2013. Still solid, but nowhere near those peak levels. And with all this construction going on, there is one more concerning trend for the Denver apartment market, and you'll see that in this occupancy chart. Occupancy has fallen 130 basis points over the past 2 quarters from 96.3 to 95 even, and that drop is not due to new supply going through initial lease-up, as you might expect, but unfortunately it traces to softening demand for apartments. Net move-outs totaling 1,600 units over the past 2 quarters. Of course, this is the seasonally slow leasing period, but this is still the weakest stretch Denver has gone through in 4 years. And that likely traces to an improving single-family home market. Sales have picked up, and that creates another housing draw, especially at the top end of the market. The good news, though, is that Denver continues to benefit from strong economic growth. In fact, Denver is adding jobs at the fastest pace it has seen in a decade, and the forecast going forward appears very favorable, too. And that momentum will likely prevent a big occupancy drop like what we saw the last time construction was this significant back in the early 2000s. So overall, given the economic outlook, we are relatively optimistic about the Denver apartment market, but further easing does, of course, seem inevitable given this volume of supply. We're expecting occupancy to drop 50 basis points over the next year and for rents to climb about 4%. So still a good performance. And that wraps us up for Denver. So until next time for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.